firms that have to change their rules from the challenge to the funded phase, there should be no reason to do this other than the fact that like you are trying to make things exponentially more difficult for people to make payouts. I don't think that's fair on the trader's part. I think that's actually very, very shady. I'm definitely of the firm belief that whatever the challenge conditions that you trade should be the same conditions that you face within your funded account. I've seen a lot of influencer run firms, kind of collapse and go away. And, I don't ever care to see another public Twitter apology again for the rest of my life. Like, don't necessarily think that they had bad intentions.
I don't think they have bad intentions. I agree. I don't think they have bad intentions. However, I do think that greed gets to them and they get blinded, and they get blinded by money instead of actually following their morals and values. That's what happens.
What's happening, guys? Welcome back to the Challenge Accepted podcast. And today's episode is another interesting topic. And I think that this is a topic that a lot of traders, especially those of you trading within prop firms, have maybe wondered in the past, or maybe there hasn't been as much transparency from firms in the past. But in today's episode, we're going to tell all, we're going to tell you I'm going to tell you how prop firms are operated, how they work. And we're going to do this in an interesting format because James, as a prop trader, he's been with Hydra for a while, but he's also traded at other prop firms. We're going to do this in a Q&A format where we're going to allow James to ask any questions that he wants about how Hydra operates, about how we operate our prop firm. And generally speaking, most prop firms are operated in a very similar manner, especially in the CFD space. And this is going to be a tell-all episode where we give you the inside scoop and the inside information on how prop firms are run, how prop firms actually make money, and even how to spot maybe some telltale signs that a firm is, kind of being shady, how to, spot firms that are potentially on their last legs or potentially operating in a dishonest manner so that you stay out of trouble. Even if you don't trade with Hydra, you should know these things because unfortunately this is still an unregulated industry and there are a lot of shady players, and prop firms do tend to come and go in very, very short periods of time. So you need to make sure that you arm yourself with correct information, and hopefully in today's episode, we're able to provide that to you. So I'm going to open up the mic to James. Fire away. Ask me.
Yeah. Okay. We got a few questions here. And I found these questions. So prop firms, if prop firms and traders can live in harmony, call it that, where both the firm and the traders can make money, that's the point of business, right? If I can make money and prop firms can make money, that is the point of business. Any successful business it should be run like that. So let's get into some questions here, some interesting questions I'll ask DY. So let's kick it off here. What inspired you to start a prop firm with Cam?
I thought that it was actually a great opportunity because when I first found out about prop firms, so I found out about FTMO, a couple of my trader friends were telling me, we're looking to get funded with FTMO. I think this was back in 2022, maybe early on in 22, or maybe even as early as 2021. So like quite a few years ago. At first, when they told me about this, I thought it was a scam, because I don't think necessarily it's bad to just assume that most things you hear about within Forex or crypto are scams. I don't think that that's necessarily a bad approach. In fact, taking everything with a pinch of salt, I think, is relatively healthy, especially in the make money online space. So when I first heard about it, I didn't really pay much attention. And then as my trading progressed and I moved over to trading Forex, I was trading a lot of crypto then, and I kind of switched over to trading Forex. I started looking more into prop firms because I had two of my buddies that were trading or trying to get funded with FTMO. And I started looking into it and I was like, how does this make sense? Like, why would anyone just give me capital to work with? And I started doing the math. I looked into the business model. I looked into, oh, cool. So it's a paid assessment. Oh, cool. So I understand the failure rates and everything. And I started doing some math and I was like, wait, this is actually a tremendous business opportunity because if I understand correctly, these firms are making a lot of money off the assessments, and then the backend is about risk management, right? So either they're hedging trades out. I didn't know how they were managing the risk on the backend, but I understood that there was potential to capitalize on, making assessment fees, which is how I assumed the money was being made, right? And that assumption was correct. And that assumption still is correct. But what I didn't understand was how were they managing risk on the backend? So I wanted to understand the full business model, how these firms are managing their risk, how they're actually making money on the front end, how much money are they losing on the back end, and how many traders are they taking live and stuff like that. So I started to dig into this a little bit. Before I ever spoke to Cam about this, Cam and I were already working together on his business over at ICANN with his education, and I was also managing his YouTube channel. And when I found out about this, I did my own research, and then I thought, hey, this is a great opportunity. We have a lot of contacts within the brokerage space. I really feel like we could tap into this, and I feel like we had the right connections to get a prop firm started ourselves if he wanted to do it. Right. So I started talking to Cam about this model, and he went through the same journey. Like, he thought this was a scam, and I was like, no, just look into it. Take your time, look into it. I think that you have a huge audience, right? Like, I think that if we do things the right way, there's a tremendous business opportunity here. And he did his own research for a little while, and then he was like, hey, maybe this actually could work. Right. We looked at FTMO was kind of like the flagship, right? They've been around for ages. So they'd obviously operated profitably for a long time. So we know that the business model could work. And we tapped into some of our contacts over at ACAP. Back then, ACAP was still a big part of prop trading. No longer is. I think it was ACAP and then Think Markets, but yeah, neither of them are really players in the tech provider space anymore since MT5 went out. But that's how we got our legs in. I thought it was a great business opportunity, just as far as having the right audience and product fit. And I thought that this was something that, Cam and I could get into. And honestly, like, when I really understood the business model, after we spoke to ACAP and, found some technology providers and really started to understand the scope of things and how we could operate, I thought to myself, wow, this is one of the very few scenarios within the trading and make money online space where there's a real win-win scenario. But it depends on how the firm runs itself. Like, it really, really depends on how the firm operates. Like, that's the crux of it. And I thought that, wow, like, I love this business model because, number one, I don't think as a trader there has ever been such a good opportunity to make money and be able to access capital. This has never existed. Like, 20 years ago, impossible, right? Like, even in our parents' time, if you really wanted to be a trader and manage capital, you have to go and work for a bank or go work for a prop trading firm on Wall Street or something like that. And I thought this was a great opportunity. And I thought that this is something that's going to change the game within retail trading. And I thought that this was, yeah, like I said, a truly win-win scenario for both traders and firms. There's plenty of room within this space for both traders to get opportunities to leverage capital and make money, and also firms to make money if they know how to manage their risk correctly. So that's what really started the journey. It was really, I've been running businesses for a long time, and I think I know when I see a really, really good opportunity and a right product market fit. And we went full steam ahead with it, and we're still here now, almost 3 years later.
Sure. Okay, so and that I like that. I like that a lot. Okay, so what we really know what challenges you guys offer at Hydra and that. What has been the biggest challenge for you though, in terms of the running the back end and everything like that right now?
So, in terms of the back end, there's a couple of components to it, but let's talk about the biggest and the most important factor and the most important aspect of running a prop firm, which is risk management, right? Ensuring that you're able to pay out your traders. Long story short, I think from a trader's perspective, most traders don't really care whether they are A booked or B booked. It shouldn't really make a difference to you. The only thing that matters is whether, when you request a payout, whether you get paid or not, right? That's the biggest, that's the elephant in the room is this firm going to be around long enough to pay me when I make my profits? And that's always the biggest consideration on the back end. A lot of things have to be taken into account when it comes to risk management. It's not just about, which traders do we take live or which trades are actually hedged out to market. It actually all starts within your plans. Everything within risk management, within prop trading, starts with your challenges, how your challenges are set up, right? If your challenges are too easy to pass, And we saw that with the race to the bottom, a lot of prop firms collapsing. There was a slashing in price. There were challenges getting easier and easier, lower and lower profit targets, higher and higher max drawdowns, right? Like there was just like this crazy race to the bottom where everyone was trying to just compete for market share at all costs. And that's what ultimately has led to the downfall of a lot of firms, because they don't realize that, a lot of these firms are maybe run by like 20-something-year-old Instagram or YouTube
Yeah.
influencers, Twitter gurus, like whatever you want to call it, that have no business, no experience understanding how to mitigate risk on this side of things. And we're very lucky to have found the right partners and been very, very careful who we work with from day one and had the right priorities since day one. But the biggest challenge really is, how do I put out a product that is competitive enough on the market so that traders like yourself aren't like this, why would I go and trade with Hydra when their challenges look so much harder to pass and they're more expensive, right? When I can go and trade with XYZ firm. And that was kind of the state of things for quite a while in the prop space. People weren't really caring about reputation or longevity. They were just looking for cheapest, easiest, and then they would go for that. But I think that has started to change a little bit now. But to answer your question, that is the most important part. Risk management. How do you make sure you can pay traders? And that means not just figuring out how you're going to hedge your risk, whether you're going to take certain traders live, whether you're going to hedge certain traders out to market, but also making sure that your plans, your challenges are competitive enough, yet they are safe enough, and your rules are safe enough for the firm to protect your capital so that you're not hemorrhaging money on the payouts. Because the way that you can look at this as a prop firm, and the way that I think prop is mostly approached now, at least by the good firms, is every dollar you make, it's not 100% belonging to the company. There's a percentage of that belongs to the future potential payout of the trader, right? And in this market, I can be very transparent about this. Generally speaking, that rule of thumb before you know a trader and whether he's going to go live or not is about 20 to 25% minimum. You can go higher than that. I would not suggest, and it depends on your pricing as well, but 20, let's just say 20 to 30% of every dollar you make needs to be held in cash reserves if you want to run a safe firm. That money needs to be set aside, sit in the bank, waiting for the payouts, because that payout is going to come. It's not a matter of when. It definitely is going to. I mean, it's not a matter of if. It's a matter of when. That payout's going to come. Maybe this trader is not going to get paid, but collectively, your group of traders, especially if you have hundreds of them, people are going to make payouts, and you need to have cash reserves. And if you're not managing this properly, if you haven't set aside a certain amount, right? If you're not taking this into account, a lot of firms can be operating like they're still operating, but technically they're already insolvent because they're not liquid enough to handle all of the future payouts. And that's when you see firms start to go into like big sales, 60%, 70% off, because they're trying to make that revenue back, but they're just digging themselves a deeper and deeper hole. I think once you're kind of in that negative cycle of like, you are technically insolvent, nobody on the outside knows, but you can see the numbers of your payouts starting to grow and your revenue is either stagnant or even going down, you're not going to make it, right? So that's the biggest part. How do I make the offer attractive enough and competitive enough on the market while still making sure that we're able to operate with safe margins, and that our challenges are not too easy, because making the challenges too easy inversely scales risk.
Yes, your business. Yeah. Okay, so who manages your risk in the back end? That's another question that we get a lot of people
So
ask.
we've actually, over the course of 3 years, we've done things a few different ways. We have had risk completely managed by our technology partners, where they are fully in charge. Their risk team is fully in charge of who's being hedged out, who's taken live, which traders are being blacklisted, like
Yes.
what prohibited trading practices are. The whole risk side has been managed by other people. We've also managed it completely internally and tried to build a team that can handle that. And we've ultimately gone back to a more partnership model together with our technology partners to have their team manage a risk, because I think when we first switched over to managing it ourselves, we didn't realize what a huge undertaking it was going to be. Like, I think we tremendously underestimated how much work it was. And, there were certain things that, let's just say, like, there were certain things that, when we switched partners didn't really go according to plan, or certain things that weren't necessarily delivered for us that were promised. It was a very rocky period for the whole trading industry,
Sure.
prop trading industry. And ultimately, we decided to kind of give up a very large chunk of our revenue, essentially, to almost hedge out our risk. And now the risk is currently fully being managed and mitigated, by the entire risk team over with our technology provider and their partner, and our partner. And that's been a lot safer. It's been actually an amazing year. I love how their team conducts themselves. I love how they send us reports. I love how much clarity we have, how much insight, how much data, we're able to get on trading behavior. And, I don't think that that's something that we could have developed on our own, or it would have been tremendously expensive, tremendously costly for us to try and do that on our own, right? Like, obviously with tech providers, especially the big ones, they operate at scale. So their risk team not only manages risk for one firm, they could they could manage risk for tens, if not over 100 firms. And when they're at scale, it's a lot more efficient than kind of taking things on our own. So we rely a lot on our technology partners, and I think most firms in the market probably do. I don't really think there are many firms that maybe internalize all of the risk management on their own. I think most firms are reliant on an external team or their partner, whether that's in a joint venture, whether that's in a white label program or an affiliate deal, whatever it is. I think that risk is mostly being mitigated and managed, outside of the firms. And I actually think that's a very smart way to go.
Sure. Okay. What has been the biggest prop firm payout that you guys have had? Has it been Sauser?
Yeah, it was Sauser actually,
Okay.
for close to $40,000 in a single payout.
And
before Sauser, we had payouts in the 20s, like 20K. I think before him, maybe the largest payout was like a 27,000. But he kind of blew that out of the water by over 10K,
Wow.
which is cool to see.
Yeah. Okay. And you guys can go watch that video on our podcast. I think it was episode 15.
We have that interview.
So go back and check it out. On how you actually managed to do that. Okay. So, okay, here's a good one. In terms of the payouts, if you know what I know you spoke about 25% cash reserves. What did you say the payouts come from? Percentage of payouts come from prop firms' fees?
As a percentage, it's very, very hard for me to put a percentage on it, because the payouts can fluctuate, especially if there are large ones. And we're not the biggest firm on the market, right? We're not one of these firms that's maybe doing, hundreds of thousands of dollars in payouts per month. So, when we're doing lower volume, that can fluctuate. So I can't give you a real percentage, but I can tell you how the backend is managed. And I can tell you that how we operate is probably how maybe I dare even say 99% of firms operate, which is majority of the payout money comes from the assessment fees, which is why having a reserve is so extremely important. Sure. I would say, like, don't trust any firm that says, oh, like, we're taking all our traders live. Like, that's just not possible based on the numbers that we know, right? Like, we have all the numbers, the data, the statistics. We've been running for 3 years. We know how things work. We know how to operate safely. And the fact of the matter is, we know that the average funded account lasts 22 days. Most people blow up their funded account very, very quickly, never even take a payout, right? I think around 90% of traders fail the challenge, right? They never get to the funded phase. And then again, from the funded phase, probably another 90% never make a payout, right? They get funded and they never take a payout. So
look at me. I lasted more than 22 trading days though, but I haven't lost the account yet. I'm going to full port it.
Time for a full pour. We'll do an update on James's funded account.
Yeah, we'll do an update on my funded account, but I have also passed I have recently passed another phase 1, so we'll see how that goes too.
Let's do an update. Maybe on next week's episode, we can talk about your challenges and funded accounts. But I think majority of props payouts are coming from the assessment.
Would you say even like a firm like would you say even a firm like FTMO as well?
Yeah, because it's not like they get a different pool of traders.
Sure.
Right? Like, it's all just like one big pool of retail traders who all collectively as a group exhibit very similar trading behavior, right? It would be ridiculous to assume that one firm attracts all the winning traders and the other
Yeah.
firms don't, right? It doesn't make sense to assume that. Majority of firms probably operate in a very similar manner, which is why risk management and cash flow management is so important, which is why holding reserves is so damn important, because it's very, very easy for a firm to be technically insolvent without them even knowing it, because the payouts just haven't come yet and they haven't prepared for the payouts to come, which is why earlier startup firms are a lot more risky, because you don't know how much capital they have back behind them, and you don't know if they have the cash flow to necessarily generate and pay out the previous traders. But I would say, I can go out on a limb and say that like 90% of the payouts probably come from assessments. And I don't think that's a stretch to assume that that's across the whole industry. But as a trader, right, from a trader's perspective, I don't really care if it's coming from assessments as long as I get paid. That's the basis of the deal that we're making, which is, if I sign up with you and I pay for the challenge fee and I pass it, I want to be able to collect my payouts when I make money, right? Are you going to be able to honor that part of the agreement? That being said, I think that there currently is a race within the prop tech space, within the prop risk management space. We work very closely with our partners on this, where they really are trying to figure out a way to monetize the trading data, the order flow, meaning like figuring out how, we have all these trades and all these traders coming through. How are we going to, at a global level, right, make money like from the trades that are being put out to market? Because unlike being a broker, prop firms cannot hedge traders against each other, right? Like if you're operating a broker, you can hedge out pretty much all your risk, right? Say James goes long on gold, I go short on gold. They just put our orders against each other, not collect the fees, and then it's canceled. They just make the spread and the fees. However, prop firms cannot do this, and that's been the biggest challenge within the prop firm risk management industry, is because we cannot do this because it's our capital. So whoever loses is losing the firm's capital. So it's a no-win scenario, right? I cannot say, if James is trading for Hydra, I'm trading for Hydra, and he's long gold and I'm short gold, the firm is going to lose money one way or the other, right? So it cannot, the risk management side cannot be approached the same way that a broker would, because at a broker, it's not their capital, it's the trader's capital. So they can decide, to completely hedge traders out and completely take no risk on, any particular trader. But the challenge within prop firms, and why I think we're still in this place where, potentially 90% or more of the payouts are coming from assessment fees, is because of this intrinsic problem, which is the capital is not from the trader, it is from the firm. So there are there are algorithms currently being researched, developed, potentially looking for ways to monetize and solve this problem. And I don't think it's a matter of if, I think it's a matter of when this gets figured out. You're going to see the prop firm industry completely change. I think you're going to be able to see, once prop firms are able to monetize the back end, meaning actually, instead of losing money off of live traders, right? If they're able to start making money off of live traders, you're going to see the market get way more even competitive, which is even better for the consumer. This is something that I really, really wish for, because if you're able to monetize on the back end, there's less pressure on you to, make challenges super hard, or like, keep them at a certain price. You can compete on discounts. You can compete on the trading environments, because the winning traders that are coming through, the winning trades, you're able to leverage and make money off of. That's obviously the ideal scenario. I think that we'll probably be there, kind of knowing, keeping tabs on where we're at right now on the risk management side. We're maybe like a year or two out from this. I dare say, like, maybe within the next 1 or 2 years, we might be able to get at least break even, if not make money on the back end. And that's going to be a huge pivotal moment, within the trading industry. And I think it's going to be very, very good for both prop firms and traders. Takes the pressure off the payout side, because why would I want to pay you out of my revenue if I don't have to? I don't want to do that. Like, I don't. Like, if I could know, right, predictively know really who's a good trader, which trades are going to win, and this is going to be figured out at a global level. It's never going to be at an individual trader's level. And this is why algorithms are being developed. It's all going to be managed algorithmically, but we're just not quite there yet. But there are some very, very intelligent people within the space that are being paid very good money to figure this problem and this issue out. And I dare say, like, yeah, 1 or 2 years, you'll probably be able to see this. And I cannot wait for this day, honestly.
No, that's obviously definitely going to help. That's interesting. Okay, so some more. So we've spoken about a lot of the risk part of things, the back end, and this is what I appreciate about DY and the guys over at Hydra. They're very open and honest about this stuff, which I think a lot of people, we were speaking about this off camera. Just how you do one thing is how you do everything. If you're open and honest about the things in one thing, you will do in everything. But DY might have to cheat in golf to beat me. But
I got my hand wedge ready, bro. I got my hand wedge.
Okay, so we've spoken about the future of prop firms. Kind of, that's some other questions that I have written up here in the back end while I was just getting some questions up. Okay, any plans for Hydra in the next couple of months? I know we spoke about yesterday's episode will be filmed yesterday, but maybe any you can let them know on this episode as well.
So the upcoming plans, we have a lot of very exciting upcoming plans on the product side this year. This is one of the things that we're heavily focused on this year, which is having the ability to develop unique products. Obviously, I'm not at liberty to speak about certain things that are down the pipeline, but there is a very, very big upcoming thing that I can speak about because that's pretty much already been confirmed as far as timeline. We will be launching features within, I would say, the next month. And that's something that I'm extremely excited about because obviously the futures market is huge. Ever since this whole MT4, MT5 debacle, props having problems, issues in the US and stuff like this, a lot of the US traders, and there's been a lot more attention given to futures. And it feels like right now, right, from a strictly business perspective, here's how I view it. It almost feels like futures is completely limited to the US right now. For example, like James, he can't trade futures even if he wanted to, but there should not really be a reason. There's a lot of times within finance, within trading, there's a lot of red tape to jump around, especially if you're a US registered company. And right now I feel like the opportunity within futures, obviously I think futures is great. Like I really, really think that if you trade, the NAS, S&P and stuff like that, futures is just simply a better product. There is no competing. CFDs cannot compete on with futures if you specifically day trade or scalp the US equities markets. So we're very excited to get into the future space. And when we do launch futures, it will be to a worldwide audience.
Sure.
That's something that I think that's where the white space exists right now, because futures has gotten so much attention, I would say, over the course of the last year. I think maybe the course of the last year, futures has really been on the up, right? Like props have been the trending topic, right? Like because a lot of people maybe lost confidence in CFD firms, and just like futures has been trending up. And I think that the white space business wise is to be able to bring futures to all traders, as opposed to it kind of being a US only thing right now, which it kind of seems to be. I can't give the full details of exactly what we're bringing to the market because there's just certain things that are still being worked out at the moment, but we're very, very close to launching the final product. And of course, we will let all of you guys know when that product is being ready, but within the next month, you should see futures coming to Hydra, and you should see futures being offered to a worldwide global audience, as opposed to it being a US only thing, which I think a lot of traders will be very, very excited about.
I'm looking forward to that, bro. Okay, so yeah, that's exciting times. As I said, as a prop firm trader myself, if there can be a great balance between the prop firms making money and the traders making money, I think that's great. As long as payouts are being honored, and I think Hydra does a great job in this. If trader gets a payout, that even if a trader skunks it and does some other shady stuff in the back end, they still actually honor the payout and the refund. So, I think that's the big issue. You got these, the companies that just would actually like just outright deny it because of some shady rule or actually a made up rule. So I think Hydra's done a very, very good job at that. I'm looking forward to you guys taking on the prop firm space. You guys have obviously also had the crypto space as well. If you guys are listening to this, you can use the code JB10 for any product on Hydra as well. The link is in my bio. So make sure to go check that out. And then, we look forward to trading with you guys. Maybe what we'll have to do, DY, is I might have to come to Bali or whatever it is. We'll have to do like an in-person Hydra trading floor for one day or something like that as well. So
that would be awesome. I mean, obviously we got to get a round in as well. I'm actually going to be in Thailand this summer. So if you feel like coming out to Bangkok, You know,
Oh yeah,
play
100%.
around. You will have to give me strokes, then. I will take strokes if you're about that early. I will be taking a couple of strokes from you. And there actually is one thing that I would really love to touch on, I think, before we wrap up
Sure.
for today's episode, which is I really think that this is information that traders should know, just like some red flags for what to look out for within the prop space. As an operator, unfortunately, we live in a world where there are bad actors on both
Yep.
sides. There are bad actors within the trader side of things who try to do prohibited things like hedging across different firms, different accounts, you know, taking advantage of things like arbitrage, latency. We see a lot of this type of what we consider toxic flow come through, and we're used to dealing with that. But there are also bad actors on the prop side. Let's be very honest about this.
Yeah.
Like, we've already seen the very ugly side of things on the prop firm, you know, prop firm side of things. So I think, as a wrap up for today's episode, like, I just want to give you guys a couple of red flags to look out for, and maybe stay away from firms that you maybe notice are doing certain things. Top of the line, top of mind, are firms that have hidden rules, or firms that change their rules from the challenge phase to the funded phase, and they maybe do it in a sneaky way, you know, within their terms and conditions or their traders agreements, right? Like, firms that have to change their rules from the challenge to the funded phase, there should be no reason to do this other than the fact that, like, you are trying to make things exponentially more difficult for people to make payouts. I don't think that's fair on the trader's part. I think that's actually very, very shady. I'm definitely of the firm belief that whatever the challenge conditions that you trade should be the same conditions that you face within your funded account. If certain behaviors are not tolerated within the challenge phase, why should the funded phase be any different, right? Like, why would you not tolerate certain behaviors when funded versus challenge? Like, it doesn't make any sense. It just more so feels like they are looking for reasons to reduce payouts, looking for reasons to outright
Agreed.
ban people if the terms and conditions suddenly change. So that's one thing that, you know, I know that maybe it's not something that a lot of you guys want to do, but you have to go and read the terms and conditions, and you want to trade with a firm that has a level playing field across their challenge and their funded phase. Because I've seen things like, oh, you can trade however you want during the challenge phase, and then suddenly when you go to the funded phase, there's like a max risk rule. You can only take a certain percentage of your account. There's like a max margin that you can risk. You can only put up to like 30 or 40% of your margin on a single position. Or even I've seen you can only put 40% of your margin on
Yes.
correlated products. And this is not being automatically monitored, right? So they will only come and tell you, oh, you tried to make a payout, but you violated this rule. That's complete BS. So really be on the lookout for firms. How you can spot this is really like, hey, if they have additional sets of TNCs that are not present on the challenge phase, be on the lookout for this, because they're probably looking for ways to deny your payouts, and looking for a way to, like, kind of fail you based on, oh, you violated our terms and conditions and our prohibited practices. So that's definitely a red flag that I think has been more common in recent times as firms have tried to scale back or roll back how easy their challenges have been. They've, instead of trying to make it fair on the challenge phase, they just try to do it on the funded side, which I think is complete BS. And I don't think that should be a practice that's
Yeah.
accepted. And unfortunately, a lot of traders only find out after they get funded, or they try to take a payout. And, oh, like, you denied me because I used 43% of my margin on this,
Yeah.
and there's a 40% margin rule. You know, just, that's shady to me, right? So number one, red flag. Number two, red flag would be too good to be true pricing and challenges, especially if they're a new firm, because a lot of times, you know, when new firms are coming in, they don't really know how to operate or run their business. They don't have the experience that some of the firms that have been around longer for, and all they care about is market share, right? So how can they compete to capture audience? How can they entice someone to leave, let's say an FTMO or a Hydra, you know, or just like one of the more established firms? How can they entice them to leave? It's by slashing prices. It's by making challenges easier. And, you know, as we discussed already in this topic, when you make challenges easier, hugely exponentially scales your risk on the back end. So your firm can very easily be insolvent without you even knowing it, especially if you're 6 months in the running or less than a year. So I would say be very careful, be very wary of like a new firm coming up with an amazing offer, super cheap, super easy conditions. I don't think I would trust that, right? Like there's enough firms in the market that have been around for a couple of years now that you can go to. Don't just pick the whatever is the cheapest and the easiest.
Sure.
That's definitely a mistake that you're going to make, because if you're trading with a firm, you kind of want to take the perspective of like, I want to trade with them long term, because
Yep.
if they can pay
That
me out
makes sense.
once, right, I'm just going to continue to trade with them. And that's always how we've operated our business, is we believe that every payout is the best marketing that we can do for the company, because whoever gets paid out is going to tell their friends, and then if their friends get paid out, they're going to tell their friends, and that's the best way to run your business. It's just, I need to just ensure that I'm always paying out my traders, and that has to be the top order of priority. But unfortunately, not every firm or not every business operator here thinks that way. So just be a little bit careful of too good to be true offers on the market. And
Yep.
third and last red flag that I think you should really, really look out for is firms that are very, very heavily playing the marketing game, right? Like
Yep.
not everything
Yep.
promoted by influencers is necessarily a good thing. We've seen a lot of influencer run firms, kind of collapse and go away. And, I don't ever care to see another public Twitter apology again for the rest of my life. Like, please just, just run your business the right way.
Public
But a
Twitter
lot of times, like,
apology.
I don't necessarily think that they had bad intentions, but maybe they just weren't aware
I th-
of.
I don't think they have bad intentions. I agree. I don't think they have bad intentions. However, I do think that greed gets to them and they get blinded, and they get blinded by money instead of actually following their morals and values. That's what happens.
Yeah, 100%. So I would say, like, yeah, marketing is a very, very important part of the game. But don't just blindly follow any influencer that's promoting their. It's not even just about firms, just like their course, their product. There's a lot of new traders out here, and there's constantly new people coming into the industry. And unfortunately, a lot of times, firms or influencers, marketers, they kind of prey on these newcomers because they don't have the experience. They don't necessarily have the know-how, and maybe they trust too easily. So I would just say, like, it's not necessarily a red flag that an influencer is promoting a firm, but look at the credibility of the influencer, right? Like, is this influencer, this KOL, are they just like all Lambos and like winning, like
Yeah.
$1 million trades and like all this type of stuff? Or are they actually real traders? Do they actually kind of share with you the progress? Which is, again, another reason why, we've worked with James for so long, is because I love how transparent he is. I love how straightforward he is. And the other influencers that we work with within the space all kind of share a very similar ethos, which is they're not afraid to share losses. They're not afraid to be transparent. They're not afraid to say, hey, like, I didn't do so great these last couple of months. Hey, I'm down a couple of percent on my accounts. I lost a couple of challenges, because it's not just about, oh, who's got the flashiest and the biggest marketing, budget, right? Like, look at who these firms are working with. Look at the conduct of these potential influencers and KOLs, and then be the judge of that, right? Like, don't just go for whatever your favorite trader or whatever is saying. Do your
Yeah.
research, look into whether this guy is legit or not, and then take your risk on the prop firm. Because honestly, like, within the space, challenges can be expensive, right? If you're going for 100K, 200K challenges, hundreds of dollars that you're spending, right?
Yeah.
Do your due diligence for yourself. Don't blindly follow influencers in the space, right? Like, don't just because someone's like, oh, cool, like, I have a 40% off promo, like, don't just jump into it. Do your research, be careful of what's being sold to you, and try to apply some logic on your side, and figure out who exactly is promoting this, and look into the people that are behind the firms, and try to judge based on, like, their track record, and like the firm owners and the prop firm record, more so than just taking the word of whoever says, oh, cool, there's a great deal and a great sale going on right now. So those are the three ways I think you can really try to protect yourself within the prop space, to try to hopefully avoid some of the scams and avoid like payout denials and avoid firm collapses. Unfortunately, it is something that you have to take accountability for yourself as a trader. And yeah, that's hopefully that was those 3 points will help you stay out of trouble a little bit. I know that things have been rocky in the last year, but yeah, that's just wanted to share that with you guys, and hopefully that's helpful.
Also, personally, on futures and CFDs, I still think futures are CFDs are the best market to trade, to be honest. But yeah, 100%.
I personally, because I don't day trade, right? Like you can't even swing trade on futures. I trade currencies mainly in gold. So for me, futures is not an attractive product whatsoever. It's just because I don't trade. I don't trade that way, and I don't trade that. So I'm a CFD for life kind of dude.
Contracts for dummies.
And you know what? On the CFD side, I found out this yesterday from Evan. I didn't really know this, but like I didn't even know that you could not close like half a contract. Whereas with CFDs you can close 20%, however much your position. It's just like a little bit easier to manage as opposed to like thinking how many contracts I want to put on. Like I prefer the ease of use of the CFD product side. So I definitely think that there's two sides. I don't necessarily think one is better than the other. I think it's a different tool for different types of traders. So like if I was trading NAS and day trading S&P and stuff like this, right? Like in scalping, I would not trade CFDs. I would go to futures. Like I would trade a futures firm because like no spread, better executions, real liquidity, things are what do you call it? Like managed, or how do you say, by the CME. So
yes.
It's just a different tool for different people, but we're very excited to be bringing on this. So for those of you who are watching, be ready for futures to come because that's dropping very, very soon. I think by the time this episode goes out, we might be a week out from launching futures.
Nice. Yeah. Okay, guys. So yeah, appreciate you guys' time as always, and we look forward to the next one.
Yeah, it was a pleasure, and we'll see you guys in the next episode. Peace.
Yes, sir.